Hello, my name is Nick Nassad and welcome to another edition of CMS Forex News. Today is Wednesday, June 18, 2008. The Bank of Japan showed in its May meeting minutes that the bank is neutral and is straddling the concerns of inflation and a slowdown. As a commodity import nation, Japan's economy is greatly affected by rising raw materials prices. Corporate profits are declining and business investments are deteriorating. The dollar-yen pair gained overnight, but paired those gains as the New York trading session commenced. U.S. equities were lower in the morning and continued slipping into the red as the session progressed. The last four sessions have seen the pair trading in a 100 pip range after the dollar gained 300 pips last week in a show of dollar strength. By 2 p.m. Eastern, the pair had approached the lower band of its recent trading range. The Westpac Banking Corp and Melbourne Institute leading index improved slightly on the back of better shares and building approvals in April. However, the annualized rate of 2.8% is below the 4% trend and shows a slowing economy in Australia. The Australian dollar-US dollar pair fell overnight but bounced off the 0.94 level to claim a new high in mid-New York trading. The pair has been climbing the last four sessions after a steep fall last Thursday. The Aussie has been climbing as expectations of an interest rate hike from the Federal Reserve diminished and traders are attracted to higher yielding currencies. The Bank of England posted its minutes for the June 5th vote to hold rates steady. A few points should be drawn. First of all, the rate cut for later this year seems to be off the table. Second, a prolonged period of inflation leads to higher expectations for both inflation and interest rates. The last point counters the first two in that a rate hike is held back by the slowdown and the bank does not want to curb inflation at the cost of a recession. The sterling declined after the Bank of England minutes revealed that a rate cut is definitely off the table. However, it also explained that the bank is not looking forward to raising rates in the current economic conditions. The pound-dollar pair declined after the release but rebounded as it approached the 1.9450 support level. The ZEW expectation index for Switzerland showed that about two-thirds of surveyed financial market experts believe that the Swiss economy will decline in the next 6 months following June. The index dropped from negative 60.4 in May to minus 63.8 in June. The current economic situation index fell to 53.2 from 64.6. Weak retail sales and industrial production data from the last two sessions clearly justify this increasing negative assessment of the Swiss economy. UK manufacturers saw a slight improvement in their order books in June. 31% of the firms surveyed reported above normal orders, while 30% reported below normal for a net of 1%. More importantly, however, is that manufactured goods prices are expected to continue rising in the next 3 months. The composite leading indicator for Canada improved slightly. This is due to strong household spending and consumer spending for durable goods. Manufacturing is also rebounding from a 3.3% decline in December and a strike in the auto industry. Tonight, Japan will release its All-Industrial Activity Index and Australia will post its RBA Bulletin. Overnight, Switzerland posts trade balance data and follows that up with its central bank interest rate decision. In the morning of the New York session, Canada will reveal CPI figures as well as its wholesale sales. The U.S. will release jobless claims numbers and the Philly Fed Manufacturing Index. And that wraps up the Forex market news for today. Thank you for joining us here at CMSFX.com and happy trading.